Right, everybody, I'm going to get right into this because there is a lot of good stuff happening right now. Stephen Meister is with us, so of course is Tracy Burns, but I'm starting right out with you, Nicole, on the floor of the exchange. Do we open at 12,000 on the Dow? Do we?
I don't see why not. I mean, we're looking at these futures pointing up a couple hundred points. So you do the math. That says 12,000 to me.
Now, we've got a European debt deal. I take it that that's good news for America's banks. Therefore, banks are doing well pre-market, correct?
Correct. Right on the money.
Can you? I saw Deutsche Bank. Now, that's a European bank, obviously. But now I'm looking at Bank of America.
Yeah,
above $7 a share?
Winner. We are looking at Bank of America. I'm seeing Citigroup, Bank of New York, Morgan Stanley, all with up arrows. And you mentioned Deutsche Bank. Those foreign banks are looking good. Double-digit percentage gains for those names.
There's Deutsche Bank on the screen right now. That's up $6. That's about, what, 15% off the top of my head, something like that.
Well done. That's right.
That is a rally and a half. Fits right into the overall rally that we are going to see in 5 minutes' time. Okay, company. I'm saying that this is a double good news day. No double dip recession because the economy is expanding at 2.5% rate third quarter. No European debt crisis for the next month or so because they've got a deal. Anything else to include?
It's big news. I think that the financials are going to see huge gains because their exposure to the European debt is down with this deal. And like you said, Stuart, with the third quarter trending now up, it's not explosive growth, but at least it's trending up. It's very good news.
Yeah, Trace?
Stuart, we need details out of Europe. There's these voluntary haircuts. I mean, you know what? Enjoy it while it lasts. But look, we haven't talked about European growth at all. So this is temporary. We're going to be back in the same situation again. I hate to burst your little bubble.
No. You're not going to burst my bubble. The futures point to a 12,000 Dow open. You can't burst this bubble.
No, enjoy today.
But I do agree with you. We need more details on how that deal in Europe is going to be imposed on the people who are going to take the pain in Europe. I've got some detail. If the Greeks owe you $1, they're only going to pay you 50 cents. That's item number one.
But that's voluntary. Keep in mind, someone could push back and say, you know what, I want 65 cents. And then what happens?
Okay, all right. It is voluntary. You're quite right on that. They've got a 1.2 trillion euro bailout fund. Now, that's a lot of money.
Yes.
Is that enough?
I don't know, Stuart, if it's enough. I think, to Tracy's point, I think it's enough of a hook or a carrot to get the 50-cent give back, I think, by the private debt holders. What we're really seeing, though, is this epic struggle over, how big should government be, how much should spending be. Long term, unless the spending is more austere, it's not going to be a solution.
That's not worked out in the long term for Europe. This is a short-term deal in principle. That's what we should say.
Exactly.
Let me break away to get back to the markets because I've got real action in stocks, yes, but also in the oil market. Huge gain there. Last time I checked, we were up $3. Now we're up $2.98, $93 per barrel. That is a 3% rise in the price of oil, roughly equivalent to the percentage gain for the stock market as well. So here we have it. 12,000 on the Dow looks very likely in 3 minutes' time when the Dow Jones Industrial Average goes up. Starts to trade, I should say. Now look at the yield on the 10-year Treasury. This was an indicator of crisis when it was way down at 1.8%. Look at it now, 2.3%. The yield is up. Now, why is that? Because we've got strength in the economy and no crisis in Europe. Okay.
You're seeing investors shift out of treasuries and into riskier investments like equities or companies investing in plant and equipment. That's job creation. That's a good thing.
But not so much out of gold.
That's true. Gold is down a couple of bucks, I think, or it was up a couple of bucks earlier. But back to your comment, look, mortgages. Here's gold, unchanged, 1723. I argued with you. I said mortgage rates 30-year fixed will be down to 3.5%. I take it back. It's not going to happen.
Okay.
Is it?
Looks like it's not going to happen.
Okay. Nicole, bring me up to date on copper. Now, we don't cover that very much, but I believe it's straight up today, is it?
That's right, up for a second day. And if you look at a name like Freeport-McMoRan, right, copper and gold, the copper is doing so well today, and that is going to be a winner today. I got to tell you, there's a real sense of urgency on the floor today. A lot of hustle and bustle, more than usual. Everybody's getting ready for this higher open.
Exactly. 12,000 rings a certain bell on Wall Street, does it not? Now, we bring you copper because that obviously is an industrial metal, and when the economy looks better, 2.5% growth in the third quarter, first reported about, what, 1 hour ago. That means that there'll be a greater demand for industrial metals. Up they go in price. It's an economic indicator as much as a market indicator. Trace.
We also saw China starting to buy back copper as well. Everyone was doubting China's growth. China's been picking up copper because copper's been down. Sandra Smith's been reporting that.
1 minute to the bell, and I want to make one more comment on China. Today, France's Sarkozy meets with the leader of China. Are the Chinese going to be invited in to help with the European bailout? Go.
I think anyone eligible for an invitation will get one, and I think they need all the help they can.
But will they take it? Yeah, that's the question.
No, will they give it? Will the Chinese offer it?
That's what I mean. Will China even want to get involved with this?
Yes, it's in their interests. Stability in Europe, one of their biggest export markets, surely that's a big deal.
Chinese bailout.
And Italy is coming down the pike after Greece.
Oh, we've got to discuss Berlusconi, Tracy. I'm sorry, but we do. All right, do you have any of the European banks? Because I think they're up even more than American banks.
Absolutely. We were watching names such as Deutsche Bank and UBS. These names were taking off abroad.
Whoa.
And you can see how they are. Look at Societe Generale, up almost 18%. BNP Paribas, 18%. So we cannot deny a name like Barclays, up 17%. What a day on Wall Street today.
Okay, now, company, that means when I see banks doing that, that means to me that that European debt settlement, the debt agreement, I should say, is more solid than you're giving it credit for.
I don't know.
I'm still argue with the market?
You know, you can't plan this entire bailout over dinner. I don't care how good the wine is, Stuart. I mean, there are still a lot of details to be worked out here.
Or it means, Stuart, that there was baked into the market previous to this announcement an excessive amount of loss associated with the Greek debt crisis.
That's true. All right, now what we've got is 236 points higher for the Dow. We have breached 12,100, still going up. 4 minutes into the trading session, we're up 243 points as of right now. Now, you're one of the skeptics. You don't think that there will be a deal. You think there will be a downgrade, right?
I do. Stuart, I think the super committee is going to crash and burn. I think the Democrats are going to insist on taxes, which is the worst thing that could happen for the economy now. We need not to raise taxes on job creators. I think the Republicans are going to refuse to do that. We won't have a deal. And then when we don't have a deal, we're going to get a downgrade, at least another downgrade. And now, this time, with the European debt deal, maybe Treasury's rates won't go down on the downgrade.
But the bottom line from what you're saying is you disagree with the congressman.
I do. I disagree with the congressman. I think
coming.
the super committee will not achieve a compromise, and there will be a downgrade.
See, to me, I couldn't care less about the politics with this thing. I'm thinking about the economy and the markets. And if there's a threat of a downgrade out there, that's a negative for the markets and for the economy, I think.
If we don't cut the spending, there's going to be a downgrade.
But right now, it's all sweetness and light, is it not? Because we've got a huge rally with more breaking news. This is from Europe. It comes from France. Dow Jones is reporting that France will unveil new austerity measures next week, and that a hike in the VAT, that's a national sales tax, will be a big part of the new French austerity plan. Here it comes. All right.
Maybe part of it. It says France mulls marginal VAT hike. Mulls. You know how they mull.
They mull everything.
They mull everything.
They mull the wine,
We've been
for
mulling
heaven's
things
sake.
for months over in Europe.
Interesting, though, that you are a little skeptical of this European deal. Scotch lady, a little skeptical of this European deal. You're kind of
I
the same.
think long term, unless we have the austerity, which I'm skeptical will happen, it's a temporary fix, and it is kicking the can down the road.
Market still loves it, though. Up 237 points, 12,100. They like the European debt deal. They like the no double-dip recession here in the United States of America, okay? You got anything else to say?
They don't make anything in Europe anymore, Stuart. Where's the growth coming from?
Do we make things here, do we?
Well, no, but Europe less.
Okay.
The governments of neither here or in Europe
And we make
anything.
a lot of things here in the United States.
Look,
Come
it's
on
Thursday
now.
morning. We've got a whopping great big rally, and you're getting all sour about the Europeans.
Put it in perspective.
Just put it in perspective. What do we got next? Okay, before we go, we have to mention the bombshell from Ruth Madoff. Listen to this.
I don't know whose idea it was, but we decided to kill ourselves because it was so horrendous what was happening. We had terrible phone calls, hate mail. We took pills and woke up the next day.
Really, that's terrible to look at that, actually. You know, that's a tough thing to look at and listen to, is it not? No matter what they did, it's tough to look at that. Comment?
It's tough to look at. The question is it credible? Ambien?
Yeah.
It's like, that's not what a suicide user would use, I would think.
You think they're just putting up a front here?
It's
possible.
But it's cowardly, Stuart. I mean, regardless of what, it's cowardly.
I don't
the
believe...
people who suffered through this whole thing, the last thing they want to hear is that.
I don't think you can, well, look, I'm not a doctor, but it's difficult to kill yourself with Ambien unless you chug a bottle of vodka at the same time, I do believe.
I don't know.
Nothing else. More breaking news, here it comes. Good news, Wire reports that the estimated losses for Fannie Mae and Freddie Mac will be revised downward, lower. The loss forecast will go down to $124 billion from $154 billion a year ago. All right, Stephen, you know this stuff. They're downgrading the amount of money the taxpayer's going to lose.
Okay, but look at what they said. It's down to $124 billion. That's good news. Okay, do you want?
It's better news.
It's better news if it's true. I don't know if it's true. I'm just reading it as it occurs right here. But it seems to me it's a huge loss. I don't know what the basis of it is. Sometimes they include defaults, averting defaults that they previously predicted. We really got to drill down here and see what this is all about.
I do remember that the original forecast, I think it was from the CBO, was that it would cost $400 billion for Fannie and Freddie. Well, now that's way down to $124 billion. Still a huge amount of money, of course.
And what about President Obama's new plan on the refinancings? If that takes place, is that in here? Because that would put much more risk on the taxpayers' backs.
All right, it's all in the mix of the news today. This rally comes to us straight from Europe, but we're going to get back to the American economy.